Hi, this is Zach Meir from Zach's Traders Cafe with a look at the major markets on Thursday, the 25th of August. Starting off with the FTSE 100, where there's key support at this uptrend line from June towards the 6,800 zone, 20-day moving average 68.13. We expect that to be tested during the day today. RSI at 57, so still the technical glass half full rather than half empty, but it would be understandable if cautious traders wanted to wait on an end-of-day close above the 10-day moving average at 68.78. That's the green line there before going long of this market again. Above the 10-day line, target 70.50, which is a July resistance line projection. On to the DAX, and here we can see that still within this rising trend channel, or just within this rising trend channel from June. Support there notionally coming in towards the 20-day moving average at 10,507, at least well above that on an end-of-day close. The upside here could be towards 11,000 plus. It's interesting to note that the RSI uptrend line from June has broken down, and we've actually tested it and failed it as resistance. So an early warning there of possible downside. If you are cautious about the DAX, then you'd wait for an end-of-day close above the 10-day moving average at 10,605 before going long again. Onto the U.S. markets, waiting for Janet Yellen and her Jackson Hole rather update. I'm going to say black hole. Here the situation is that we've got possible break of this uptrend line from June, not quite below or enough below the 20-day moving average at 18,503 to totally write off this recent consolidation as a bearish one. But he did gap to the downside yesterday, so that is a warning. So probably, all in all, you wait for an end-of-day close back above the 10-day moving average, 18,566, before going long again. Otherwise, there's the risk of a dip towards the 50-day moving average at 18,241 over the next couple of weeks. For the S&P, we've got the situation where, again, the 20-day moving average, 2175, came into play at the close, waiting on really today's session and today's price action to see how this market's going to pan out. But probably the easiest way forward here is to wait for a clearance of the 10-day moving average at 2183 as a fresh momentum buy signal. Above that, we could head up to 2220 or more, which is a June resistance line projection. Otherwise, there's the risk, as in the case of the Dow, that we'll have to test the 50-day moving average, which in this case is at 2140. For the Nasdaq, that was or has been the golden market, but even here we're back to the 20-day moving average at current levels. Now we've got the risk of, let's say, a dip towards initial August support 46.89, and that is a possibility to trade off while there's no end-of-day close back above the 10-day moving average at 48.06. For the currencies, looking at cable, still on the firm side, back up to this resistance line from June, 132.50. We could spike up to the 50-day moving average at 133.08 over today's session. And overall, this does look like a quite constructive setup that we've got here in terms of basing, one that could take cable back up towards 135 plus, which is post-June resistance. At this stage, only back below the 10-day moving average at 130.90 would question the recovery argument. Onto the euro, which, although it's lost against the pound quite painfully, remains at least above the initial August 112.33 peak. While there's no end-of-day close back below that, we're probably still in the game as far as seeking out a 114 target, which is post-June resistance. Best case scenario here above 112.33 is up to 116, which is the top of a rising June trend channel. For dollar yen, the story of the week so far has been about the way it's been grappling with the 100 yen level. So far winning the battle, and really right near the 10-day moving average, but at least while we're below the 20-day moving average at 101.06, there is the risk of a dive below the 100 yen level, at least back towards the 99 yen level seen in at the end of June in the wake of the Brexit vote. Finishing off with gold, which has been, say, slightly difficult of late. the threat now is that we'll have a little bit of a negative move here back towards the main support around the 1305 level from the end of June up to 1311 last month, and that downside, mini downside at least, is valid while there's no end of day close back above the 50-day moving average at 1332. That's it for me. More updates at the same time tomorrow.